Well, thanks for joining us here on the Market Day Report in the middle of the trading week, and we're interested to see which way we want to go with the grain markets here today. Let's see if we are hanging on to any gains in the corn or not. Overnight, it was a little bit higher, but then when we opened, it seemed to be under a little bit of pressure. So currently, we have the March corn now trading 2.5 cents lower, and now 2.25 lower. Just changed. Now it's quoted at $3.80 per bushel. The May contract down 2.25. We're at $3.85 3/4. In December, the new crop month on the corn currently a penny and a quarter lower at $3.91 I was just reading here off the wires that the corn futures, they say, are trending lower after being higher overnight, basically due to supportive South American crop weather there, which is beneficial for the crop there and helping to increase yield production estimates for that country. So that would provide, of course, a little more competition to U.S. corn. So we'll wait and see how that all shakes out. If we move on to our soybean trade here this morning, on the soybeans, we are just fractionally higher, not big gains at all. We have the March contract now a 0.5 cent higher at $8.80 per bushel. And we now have the May contract 3/4 higher. We're at $8.93 3/4. Now that September is up 1 3/4 cents as we speak here. And I was just checking out that November contract. It's actually up about 3 3/4 cents. Now let's move on to the wheat. And in Chicago wheat, we have the March contract a 0.5 cent higher at $5.57 3/4. We also had the Kansas City market trying to follow suit here. But we have the Kansas City on that March contract 2.25 higher at $4.69.5. Earlier this morning, we had some new information that came out from what they call Stats Canada, in other words, Statistics Canada. And it was an estimate of their stocks for grain and oil seeds there. And basically, what we are going to look at is a summary of the barley and the canola and the oats, the all-wheat category, and also the durum for the stocks. And for the barley, they came in with a total of 5.96 million metric tons. That was up significantly from what we had a year ago at this time when it was under 5 at 4.94. Canola down a little bit at 14.27 million tons. Last year we had 14.62, so we are down from that. The 5-year average, though, is 13.6, so it's still above that. In the all-wheat category, 24.98 million tons. Last year at this time it was 25.11. The average, though, is 24, so it's above the 5-year average, but below what we had a year ago at this time. Brian Hoops joins us now from Midwest Market Solutions. As you look at this kind of timid open here on much of the grain markets today, can you read much into that, Brian?
Yeah, good morning, Marlon. You know, there's not a lot going on this morning. No export sale announcements once again.
Right.
A little bit of harvest delays in Brazil giving us a bounce in the overnight. But, I think the market anticipating that we are going to get that crop harvested. They are undercutting us as far as our prices. There was a report out yesterday that they had bought about 5 cargoes of soybeans. China had bought 5 cargoes out of Brazil. And it's about a $15 a metric ton difference in price. And as we go out into March and into April, that discount becomes about 40 cents. So it's a much bigger discount. And the market's just fearful here that South American supplies are going to undercut our corn and soybean markets.
Now, overall, when we talk about the weather conditions there, Brazil is currently getting ready to put in their second corn crop. Is that right? Their safrinha crop?
Yeah, they'll be harvesting soybeans and planting the corn crop behind it, and that will be harvested much later date. But the soybean crop is coming off, and by all indications, it's a record large crop. They've increased crop sizes as we've gone through the winter months, based on good growing conditions, and so it looks like they're about the normal pace for harvest and for planting that second crop. And there's, going to be a big crop of soybeans and a very big crop of corn coming following this harvest as well.
An interesting note there is safrinha crop accounts for, I believe, 70% of their overall corn production. It's actually larger than the first crop is. So it seems counterintuitive. Let's take a look at our livestock trade in just a moment, Brian. We'll come back after a word from our sponsors, and we'll see if we're going up or down in the cattle and hogs after this. Brian Hoops is our guest. He's with Midwest Market Solutions out of Springfield, Missouri. By the way, Brian, are you getting any of that snow yet?
Nothing yet. They are talking about it coming this afternoon, but so far just a little bit of a rain, but no ice, no freezing temperatures, no snow yet. So far, so good.
Yes, so close at this point. Let's take a look at our livestock trade. We'll go to the big board in Chicago and start with live cattle. Right now on the big board, we are mixed. We have February up a little bit at 17 cents higher, but basically time is running out there. April is down 8 cents. That's where most of your volume is. It's at 120.58, so not much going on. On the feeder cattle market this morning, we are lower. Let's take a look on the feeders, and we currently have the March down 72 at 136.78. We have the April down 53 at 138.40. On the lean hog market, currently on lean hogs, we have the February up 38, but that active April contract up only 7 at 62.40. And oddly enough, the May contract is down 23 cents. It's the only one lower. It's at 70.67. The deferreds are a little higher. We have some new Iowa, Southern Minnesota weekly hog weights, and let's take a look at what we had this past week. Looks like they came in at 286.9 pounds compared to last week's 287.3. So down about 0.4 of a pound. Brian, is that going to help that market any?
It's a little bit of a move, but it's something, I guess. The markets need badly need some direction, and that's the one thing that can give us a little bit of a positive boost. The February contract remains below that lean hog index, and that should help the February gain a little bit as well. It's too far discount for this time of year. It needs to narrow that up before it expires next week.
Real quickly, do you think the cash cattle market is going to be able to recover this week?
I think we're looking at a fully steady market with the show list numbers down a little bit this week. I don't think we're going to see an advance, but at least a steady market, and that should keep the February live cattle contract right around that 122 area, and we shouldn't see much downward pressure against the cattle futures.
All right. Well, thank you, Brian, for the info. Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri. The Dow is still up almost 300 points, Janet. I see crude oil is up about $1.83, so big jump there, too.
A lot of changes. All
yeah,
right.
lots
Thank you very
going
much.
on.